one of the contradictions and ironies surrounding Elon Musk, and that is the company that made him famous and his fortune. Tesla is no longer his biggest asset in his portfolio.
Tesla's stock has tumbled 8%, pushing its market value below $1 trillion for the first time since November.
The stock is down roughly 25% year to date, and it's only the end of February.
A $135 billion loss in mere days. An unthinkable blow for what was, until recently, the most celebrated electric vehicle pioneer in the United States. Some observers call it a temporary setback, but the tremors from this collapse have already shaken the entire American stock market. Just days ago, Tesla's share price plunged nearly 10% on April 4th, 2025, erasing well over $25 billion in market value almost overnight. How could a single company's fortunes turn so quickly? And why does it matter to every American who drives a car, invests in the market, or dreams of technological progress? From sudden tariff escalations to whispers of betrayal by international partners, the story is anything but linear. Fingers are pointing everywhere, from the federal government's aggressive trade stance to Elon Musk's unguarded social media. Brace yourself, because Tesla's unraveling could be a warning for every industry standing on the precipice of global economic turbulence. Tesla's early promise was to revolutionize transportation and champion American innovation. Progress soared on the back of confident investors, a cult following, and a soaring price-to-earnings ratio that recently stood at 117.37, indicative of sky-high expectations. Yet, beneath the glossy headlines, a perfect storm brewed. When the previous administration pushed for tariffs on imports to protect domestic manufacturers, few anticipated that a global counterattack might hit Tesla hardest. According to some analysts, these tariffs were a necessary evil to shield American jobs.
Trump administration's beginning mass layoffs of federal workers impacting multiple agencies. Tens of thousands of employees are expected to lose their jobs.
But Tesla's extensive reliance on global supply chains made it uniquely vulnerable. Suddenly, crucial battery metals from friendly nations, cobalt, nickel, lithium, became objects of fierce diplomatic wrangling. Europe slapped retaliatory duties on American-made cars. Canada, provoked by repeated tariff hikes, began discussing a more extreme measure, restricting the export of minerals to the very companies Washington aimed to safeguard.
Tonight, Canada will be collecting tariffs on American-made vehicles coming north. That's in response to the tariffs on Canadian cars that were imposed last week by Donald Trump.
Rapidly escalating tensions translated into higher production costs and delayed shipments for Tesla. Compounding this, raw material bottlenecks forced production lines to slow, leading to a flurry of canceled orders and furious customers. Perhaps the most jarring signal of long-term trouble came on April 4th, when Tesla's shares plummeted 9.6% in a single trading session. For a moment, it appeared the entire American economy might shudder from the aftershock. At the center sits Elon Musk, Tesla's visionary yet polarizing chief executive. On one hand, he's celebrated as an innovator who sparked a new era in electric vehicles and space travel. On the other, his flippant remarks, "If you do not like the volatility, do not buy Tesla," he once parodied, have alienated steadfast supporters. Over the last few weeks, institutional investors grew uneasy with his public meltdowns, offloading Tesla shares amid the swirling chaos. These public moves contributed to a slow bleed of confidence that accelerated Tesla's critical losses. But Musk is not the only actor in this drama. The Canadian government, once a close ally, stunned observers by hinting at legislation that would ban the export of key battery minerals to American automakers.
As we're now learning that some big automakers are refusing to ship their products into the United States after these tariffs that have been imposed by President Trump.
Each day brings new tariff threats. Now, President Trump is threatening tariffs on steel and aluminum.
This was the same Canada that used to champion Tesla's electric vision, providing rebates and welcoming new factories. Industry insiders say Redwood Province officials introduced emergency measures restricting shipments of nickel and cobalt in response to the labyrinth of tariffs Washington continued imposing on Canadian goods. Politicians inside the United States labeled Canada's reaction as overkill, yet the results were immediate and brutal for Tesla. Europe, meanwhile, capitalized on the turmoil. Volkswagen gained momentum with a market valuation of $159 billion, a far cry from Tesla's $909 billion, though it suddenly looked better positioned to seize lost American market share. Having localized battery production in long-cultivated European subsidies, Volkswagen leapt into markets where Tesla's presence rapidly declined. Rumors even suggest that the European Union views NASA's achievements with Musk's other ventures more favorably than his automobile endeavors, prompting some officials to treat Tesla with greater skepticism than ever before. Chinese manufacturer BYD, infamous to some for forging its own battery supply chains, remains another key piece of this puzzle. Despite earlier skepticism about Chinese EV quality, BYD has grown faster and is less affected by Western political micro-wars. That independence grants BYD an edge in markets now closing their doors on Tesla. Adding to the spike in tension, the International Monetary Fund has warned that American automakers are confronting an existential threat from Asia's battery dominance, a warning Musk dismissed back in 2022 as irrelevant. Today, it seems those dismissed cautions have returned with a vengeance, fueling the narrative that Tesla's global retreat is paving the way for BYD's ascent. As consumer trust in Tesla erodes, protests erupt at once friendly dealerships and distribution centers. Striking workers, not just from Tesla, but from a broader network of manufacturers, gather outside state capitals, holding signs reading, "We built this, you broke it." American labor unions seize the moment to argue that misguided trade battles and corporate mismanagement have undone years of growth. In this complex web of blame and backlash, it becomes painfully clear that no single entity can orchestrate a graceful exit from the crisis. Tesla's unraveling has consequences that stretch far beyond the fate of one corporation. When the world's premier electric vehicle icon stumbles, global trust in American manufacturing is called into question. Investors eye other U.S. companies with newfound suspicion, wondering if the same vulnerabilities, complicated supply routes, high operating costs, combative government rhetoric could topple them as well. Recent data indicates the U.S. stock market has lost hundreds of billions in value since Tesla's plummet, revealing a fragile confidence that can be rattled by a single major player's downfall. Foreign governments are taking advantage of the shift. European officials speak openly of funneling more subsidies into local champions, accelerating alliances that exclude U.S. influence. Volkswagen's leadership was seen meeting with policymakers to secure additional incentives for producing electric vehicles on European soil. In Asia, BYD marches forward with minimal friction, unveiling global expansion plans that rely on fully vertical integration. Everything from mining raw materials to assembling final battery packs within Chinese-controlled networks. This global realignment isolates the United States in unprecedented ways. Over the last decade, Washington has prided itself on its tech-forward economy, leaning heavily on Silicon Valley's breakthroughs to project technological dominance. But with Tesla losing its luster, the question emerges: can the nation maintain its edge without that flagship brand leading the charge? The accelerating timeline, where shares dropped nearly 10% in a single day following a 13% monthly decline, suggests a free fall that might not stop until the U.S. rethinks its alliances or trade policies. Meanwhile, everyday Americans, from factory workers to retirees, fear a deeper recession touched off by Tesla's crash. Rising mortgage rates, diminishing pension funds, and a tightening job market weave a grim tapestry that few policymakers can ignore. In the wake of these global shockwaves, the White House is scrambling for leverage. Insiders hint at emergency talks aimed at rolling back certain tariffs to appease Canada and salvage some portion of Tesla's battered supply chain. Yet these negotiations bring another threat: political backlash from the very groups that supported hardline trade policies in the first place, believing they would protect American interests. There is also talk of doubling down on an America-first approach to electric vehicle production. Legislation is rumored to be on the table that would heavily subsidize domestic battery plants in states like Nevada and Texas, but critics worry that such a move could enrage trading partners even further. The third and riskiest path involves forging new deals with nations that lack established trade frameworks, raising ethical questions about human rights, environmental standards, and labor conditions. Each option carries formidable political and financial risks. None offers a guaranteed fix to the monumental loss of investor confidence. Meanwhile, Tesla's workforce, once loyal to the mission of accelerating the world's transition to sustainable energy, is disillusioned. Skilled engineers trickle away, lured by European automakers' recruitment drives or by Asian competitors offering stronger job security. The meltdown has hit morale in ways that no government bailout could repair, and it underscores Elon Musk's precarious position. The clock is ticking, but a resolution seems further away than ever. America stands at a crossroads. If it does not repair its alliances, it risks further isolation in a world increasingly defined by strategic partnerships. Yet rolling back tariffs or partnering with dubious regimes exposes the nation to fresh economic and ethical pitfalls. Will Tesla's collapse and the ensuing crisis serve as a wake-up call, or simply another chapter in America's manufacturing decline? As the final hours of this drama unfold, new voices emerge, clamoring for alternative solutions and pointing to other innovative industries still thriving despite global tensions. Yet the shadow of Tesla's downfall lingers as a stark reminder that even the brightest technological vision can be undone by economic policy, personal missteps, and global rivalries. Can America survive without Tesla as its tech crown jewel? The next moves made in Washington will determine whether this nation's electric dream endures or vanishes in a haze of shattered promises.